Silicon Valley Bank was founded in 1983 as a bank that specialized in serving tech startups, venture capitalists, and crypto companies holding about $100 billion in assets. SVB became one of the leading banks in the crypto space, offering services such as custody, lending, trading, and stablecoin issuance for its clients. It catered to many crypto startups and investors. As part of its focus on innovation and technology sectors, SVB had invested heavily in corporate bonds, especially those issued by crypto firms, which were considered high yield but also high risk. In February 2023, the crypto market crashed due to a combination of factors such as regulatory crackdowns, hacking attacks, environmental concerns, and market manipulation. As a result, many of the bonds that SVB held defaulted or lost value, causing SVB to suffer huge losses on its portfolio. To minimize its losses, SVB sold off some of its assets at a loss of $1.8 billion. Then, on March 10, 2023, SVB announced that it needed to raise $2.25 billion in capital to meet regulatory requirements. SVB faced a liquidity crisis after a wave of deposit withdrawals by its customers who were spooked by the collapse of Silvergate, another crypto-focused bank that had lent money to SVB. Silvergate failed after its major client FTX, a crypto exchange, went bankrupt. Investors and depositors panicked and withdrew their funds from SVB, triggering a bank run that drained its liquidity and solvency. On March 11, 2023, the California Department of Financial Protection and Innovation closed SVB and appointed the Federal Deposit Insurance Corporation as the receiver. The FDIC created a temporary bank to take over SVB's deposits and facilitate their transfer to other banks. Circle, a crypto firm that issues USD Coin, a stablecoin pegged to the US dollar, which revealed that it had $3.3 billion of its reserves at SVB. Their collapse caused Circle to lose its peg and trade as low as 85 cents, shaking up the crypto market. Avalanche, a blockchain platform that supports smart contracts and decentralized applications, which announced that it had over $1.6 million in exposure to SVB. BlockFi, a crypto lending firm that filed for bankruptcy in November 2022, which listed $227 million in uninsured holdings at SVB. SVB had a stake in Coinbase, the largest cryptocurrency exchange in the US, which could have been worth $152 million at its peak. SVB also suffered from the hike in interest rates that made its bond purchases go negative and eroded its capital buffer. It also faced regulatory scrutiny for its involvement in the crypto industry and its lack of transparency. SVB to risky loans and investments in unproven startups and crypto companies, which suffered losses due to market volatility and regulatory uncertainty. The lack of adequate capital and liquidity reserves at SVB to withstand a sudden run on deposits, which was triggered by rumors of insolvency and fraud. The collapse of SVB had a direct impact on some crypto companies that had accounts or partnerships with the bank, such as Circle and BlockFi. These companies faced difficulties accessing their funds or maintaining their operations after SVB was shut down by a federal regulator. This led to a loss of confidence and trust in some crypto assets, especially USDC, which dropped below its $1 peg at one point. This also contributed to a broader sell-off in the crypto market, as investors panicked and sought safer alternatives. The downturn in crypto was triggered by several events, such as the collapse of algorithmic stablecoin Terra USD, the bankruptcy of crypto exchange FTX, and the regulatory crackdown on crypto activities in various countries. These events caused losses and liquidity problems for many crypto startups and companies that relied on crypto-friendly banks, such as Silvergate and Silicon Valley Bank, for their operations. As a result, some of these banks collapsed or filed for bankruptcy protection, such as SVB, Silvergate, and Celsius. This further worsened the situation for the crypto industry and its investors. Many venture capitalists who had invested heavily in crypto startups also suffered losses or write-offs due to the failure of their portfolio companies, or their inability to access their funds at the failed bank. Some VCs have decided to rethink their investments in crypto startups, or turn away from them altogether, as they see the technology as flawed or too risky. Others have stepped in to provide emergency funding or support for some of their surviving portfolio companies. VCs invested about $30 billion in crypto firms in 2020, 21, which was more than 400% increase compared to 2020. However, in 2022, VC investments in crypto companies were down to just $9.3 billion in the first 6 months, as opposed to $12.5 billion in the first half of last year. This means that VCs lost about $3.2 billion in crypto investments since the end of 2021, until June 2022. The decline was attributed to several factors, such as regulatory uncertainty, market volatility, and environmental concerns. One of the biggest crypto losses for VCs in 2022 was the $150 million bailout of Sky Mavis, the developer of Axie Infinity, a popular play-to-earn game that runs on the Ethereum blockchain. The bailout was funded by some of the leading crypto investors such as Binance, Andreessen Horowitz, and Paradigm, who participated in a funding round for Sky Mavis on April 7, 2022. The bailout was necessary, because Sky Mavis faced a liquidity crisis due to a massive hack that drained its treasury of over $200 million worth of tokens. The hack also caused a sharp drop in the price and popularity of Axie Infinity, which had been one of the most successful crypto projects in 2021. With over 10 million daily active users, SVB's failure sparked a blame game between crypto and traditional finance sectors, with some accusing SVB of being too reckless and others blaming regulators for being too lax. Did SVB collapse because of a downturn in the crypto market, or did they collapse because they relied too much on VC investment capital to have enough money in reserves? We will create more content about this historic collapse as more information comes to light.